So I think another key thing is, of course, the BMC financing. We are as you have seen, we have now we're very pleased actually that the government has made sure that we have an equity injection into the BMC in the amount of 200 million. That provides us the solidity which is required for us to sort of have a credible financing. 200 million is of course not enough in order to have all the funds that is required to actually do the first transactions here, but it provides the equity of BMC, and that's very important. So in terms of the financing, BMC will be financed with the equity, the 200 million, and in addition to that we will actually finance the rest of sort of our balance sheet by a bond program where we will issue bonds. It will be a combination of 2 and 3 year bonds with a 2 or 3 year maturity, a combination thereof, and initially those will be placed with the banks that we're actually going to do the first transaction with, i.e. NLB and NKBM, for the amount of basically the transfer values. But I would actually like to separate basically sort of I should call it the financing part and sort of what we do with the funds afterwards, because in the end, you know, we finance BMC and then we use those funds for all the needs that we require. And to be clear there, I mean, we will use the funds, i.e. the equity and also sort of the bonds that we will issue for a number of things. We will use the funds in order to fund the operating cost of BMC. We will use it to fund the financing cost of BMC. We will use it to buy and pay for the assets that we buy and purchase from the 2 and then later 3 banks. And we'll also use it in order to do whatever is required to optimize the value of the assets that we're going to own and eventually sort of exit in an orderly way. And there I've seen in media that there's been some speculation that the 200 million will be used for giving loans to some restructuring companies in their needs. Now, first of all, I mean, we are actually not a bank. We don't give bank loans, so we cannot do that. This is actually the reason why we rescue the banks. We still need the banks going forward, and certainly we will need the banks in order to find restructuring solutions going forward. But we can do other things that I think the banks are more reluctant to do, and that is of course to find, if appropriate, sort of the best investment solutions in order to create and optimize the value of the asset we're going to own. So I think on the financing side we're progressing very well. The bond program that we have sort of prepared is ready to execute, and we will have that ready to make sure that that is sort of operational when we get the approval from DG Comp, so we can start executing on that. The bonds will be guaranteed by the Republic of Slovenia. And I think notably here is that what we do here is that we're actually buying non-performing loans out of the 2 banks first and then a bank later. And thus we're paying with a bond which is a performing asset. So in a way, only that, you know, that measure is sort of replacing a non-performing loan with something which is performing in the banks. And not only that, we have also make sure now that we have sort of we're structuring the bond, and we're making sure that the conditions of the bonds are such that it should be acceptable as collateral in the euro system, and thus the banks can use this bond to basically secure liquidity going forward in the banks, which also is very important. So we have liquidity from the banks that can be deployed as we're restoring normal operations, and the bank can start sort of funding good business and growth in Slovenia again next year.